Okay, so let's go on with our stories today. We have a whole bunch of stuff we're going to go over. We're going to talk about who Warren Buffett is betting on when it comes to real estate and new home builders. It's decidedly not one company, and it certainly is the other. Commercial mortgage-backed securities are not doing as good as they could be doing. In fact, they're doing downright bad. What does that mean for the rest of the market? We got some other graphs that are showing you the pockets where there's success and maybe some sales nourishment of the process. So let's get right down to it. Sharing all that good stuff. You know what you need to do. It helps me bring great content over to you guys. All right, moving on. Moving on here, weekly pending home sales. Right now, check it out, guys. We're higher now than we've been in the previous 3 years. That's actually kind of a cool thing. Currently, we're sitting at 61,000 in the previous 3 years, represented by the purple, the orange, and the darker orange, or that might be yellow, depending on if you're colorblind or not. We're doing better than we have then. Now, you'll notice over on your right-hand side, this was provided to us from Compass, but we tend to have a precipitous drop-off over here late in the year. Our November, December months, when people start to nest. The right-hand side, what we're looking at over here is office delinquency rates for mortgages converted into commercial mortgage-backed securities month over month. This is going back to 2008. Looking over at 2008, they're all right around close to zero. Then, oops, by the time we got to 2011 and 12, it came after the residential mortgage-backed securities collapsed. Then we got the commercial mortgage-backed security market collapsing. They tend to go hand in hand. You can see that with that massive lump on your left-hand side. Now, that's marked over on the right-hand side, the 11.8%, and beneath that in parentheses, it says record high. That's right, we have record highs right now in commercial mortgage-backed securities. This is great for a couple of reasons. First of all, it tells us that our market is going to fall apart, and that is a great thing because we're going to see from those delinquent residential mortgage-backed securities, which are on their way. They are coming to us. FedEx, UPS, they're coming to us via Amazon bus driver. It's happening right before our eyes. They go hand in hand with each other. It's higher than it's ever been. We'll probably see the same for residential mortgage-backed securities, but this will come along with lower sales prices. I like to refer to lower sales prices in the residential real estate market as a sale. We are going to have a real estate sale, and everybody loves the sale. The second thing with record high delinquent resident or commercial mortgage-backed securities is that it's because we have space availability, vacancy rates for commercial real estate all across the country at levels that we've never seen before. All right. Where values have dropped, the darker the purple, the bigger the drop, the lighter the purple or the lighter the yellow, the lesser the drop. The article says, well, it seems like the West Coast is getting hit the hardest. Evidently, they have not looked at Texas, Alabama, Arkansas, or Florida because they're getting pounded pretty bad too. On another graph that I don't have up here right now, it talks about states that are in recessions. California, strangely enough, is in the middle of a recession, in the middle of getting into a recession. Right above California, Oregon, and Washington, their recession is imminent. And Florida, according to this one site I just went to, said that they're fairly far away from a recession, which I find hard to believe based on all the dark purple down there. The darker the purple means the hotter the markets. Now, when you're looking at the lighter yellows, those tend to be in what are referred to as the flyover states, or also known as the Rust Belt cities. Some of my favorite cities in this country that I've ever gone to are those. I think the cities in Ohio are fantastic. I love Milwaukee. And by the way, they're on the rebound, and you can find affordability out there. So if you find yourself in one of the Midwestern states right now, chin up, people. Berkshire Hathaway Home Services expects a surge in unoccupied homes left behind by baby boomers. Ain't that interesting? Remember a moment ago I just told you that death and foreclosures are going to give us the inventory that our home builders are not giving us. Death and foreclosures. Why death? Because baby boomers, they basically control 75% of the residential equity in this country. 75%. That's a freaking landslide. And that's my mom's generation. My mom, who is currently 79 years old. And listen, I'm just being realistic about things. But these next couple of years are going to see massive influxes in real estate that is essentially abandoned. As baby boomers age, they are expected to leave behind homes that many prospective buyers won't be able to afford. This could shake the already tenuous housing market as demand among older and younger homebuyers shift towards smaller and affordable homes. See, I disagree with the premise of this whole thing. I think this is going to be a surge in inventory that's going to pull all prices down and help everybody out. But I do like the idea how they say they're going to leave these homes vacant. As of October 2025, 53% of homes have lost value over the past year as measured by their Zestimate. Well, this is from Zillow, so we know it must be super duper accurate. So going forward, as if Zillow does have accurate estimates, then we can conclude that 53% of properties have lost values. That number is probably somewhat accurate, and I'll tell you what, let's have this conversation January 1st. I bet you there's a line that's going 45 degrees through that 5 and turns that sucker into an 8. I bet we're sitting at about 83% have seen their property values drop. What do you guys think? Let me know in the comments down below. Also, are you buying all this Warren Buffett stuff? His investing is fantastic, but it's not, the Oracle of Omaha. I don't know. Are you buying it or not? Okay, so CrossCountry Mortgage issued $600 million in debt for mortgage servicing right repayments. The proceeds are going to be used to repay mortgage servicing right credit lines as mortgage lenders continue to tap into capital markets. Now, I don't know anything about CrossCountry's financials, but I know this. If I tap into my savings, it's because I have to, not because I want to, right? And it would make sense. I mean, we're not doing the volume we've done in years past. And a lot of these, commercial direct non-banking mortgage companies, they've got top-heavy models versus a lot of the brokerages out there. They employ more people. They consume more money. They provide great stuff. I'm not knocking them, but I'm saying these markets become difficult for companies like this who tend to be a little bit more top heavy and less nimble. That's how I take it. Again, these are my opinions, Brian Stevens' opinions, and that's it. I don't have any insight whatsoever into the inner workings or the financials of CrossCountry or any other mortgage company. Article summary: CrossCountry Mortgage issued $600 million in senior notes at 6.75% due in 2032, primarily to repay its MSR lines of credit and fund corporate needs. Corporate needs, ouch! The move follows a $900 million debt issuance in September. Ouch! It's $1.5 billion. It's a lot of money. Listen, I said this before, I'll say it again, is a lot of these companies, they were not really to be seen or really well known prior to the 2008 meltdown. You see, we had other mortgage companies, consumer-facing, non-banked residential mortgage companies out there who were huge back in 2004, 5, 6, and 7. And all those independently owned ones, they're all gone today. The biggest players from back then, they're gone. Why? Because they were successful. They did not see the market shifting in front of them, and they were incapable of making the appropriate pivots. I wonder if the market that we're in right now with some of our larger independently owned and even publicly traded mortgage companies, if they have built ships that are too big to make a efficient shift in direction. Other mortgage companies that have issued debt recently include United Wholesale Mortgage Corporation, which closed a $1 billion senior note issuance in early September. Companies such as PennyMac, Rocket Companies, Better Home and Finance Holdings Company, Rhythm Capital, and Planet Financial Groups have all made similar moves. Are these done because they have to? Is this a move of desperation? Is it a move because they have not made the appropriate pivots? But, not for me to say. I don't know anything about any of these companies. But I do know this. There's going to be a lot of mortgage companies and real estate companies today that will be all but a distant memory about a decade from now. I do think that we have significant pivots that are taking place in our industry right now. And frankly, I think there's companies who do better jobs at this than other ones. But what you need to do as a loan officer is find out who fits your needs, and you go all chips in with them, because right now, a loan officer has to have a great mortgage company behind them if they want to succeed in the turbulent waters that we have going forward. But that said, you guys all make it a great day, and I can't wait to see you. Until next time. And by the way, you might have heard this, that Zillow right now is, they've changed some of the language that they're using with agents that they're working with that allows them to tap into your database. If you have part of your database uploaded into Zillow, they're going to be able to tap into your past client database. It's a subtle yet very, very tectonically large change in the contracts that they have real estate agents signing right now. Why would they need to tap your database? They said, well, we're only going to tap the database of, your clients who have Zillow profiles. Okay, if they have right now, I've already looked at this. They get north of 50 billion hits a year. Everybody who's thinking real estate in some capacity goes on to Zillow, which means they're going to be tapping into your database. What they're going to do with that, I don't know. But here's what I do know, especially if you're somebody who's wearing a mortgage hat and a real estate hat combined, we have to be very, very judicious about protecting the information of our clients. And if you're allowing third parties like Zillow to go ahead and tap into your past client database, I've got to think a regulator somewhere is going to get pissed off at that. Not a good idea. How do we fix this problem? Don't give Zillow your information or pay them money and encourage them to compete against you as a real estate agent. My God, when are you guys going to figure this out? With that said, let's go have a conversation with Madison Jones, a real estate agent and loan officer from Southern California who's figured this out, and find out what she has to say about the moves that Zillow is making. Madison, how are we doing today?
Good. How are you?
Good. So what's going on with this Zillow thing?
Basically, Zillow acquired Follow Up Boss, and now they have access to data that you put in there as a real estate agent for your clients.
So if you're using Follow Up Boss inside of Zillow, which they own, and you're uploading your database in there, they've changed the wording on their contract that says that it stipulates they can now go ahead and access those clients.
They now have access to that, and now they've also allowed you to access their pre-approval through Zillow as well. So it's a shared system now.
Interesting. So the concern here is that they're going to take your past clients, and if you're not using Zillow or actively participating with them, that means paying them, that they would then go nefariously take your past client database and go ahead and share it with other agents, much to their financial benefit. Is that your concern?
That would be my concern, definitely. Yeah. I don't want anybody accessing my client information, especially if I'm paying for a service like Follow Up Boss.
Not to mention, is that even legal? You know, from a lender's perspective, so how many real estate agents and loan officers there are carrying both hats? And as a mortgage loan officer, we are so buttoned up in terms of the information that we're sharing, and now providing our information to a third party, a for-profit company. It seems to me like this could be a little sticky when it comes to compliance issues. Would you agree with that?
I would definitely agree with that, yes. Privacy issues, we have privacy notices we have to share, also as real estate agents as well. So I don't know how that passes the sniff test. I'm not sure.
Well, you know, one of the things here is that Zillow, guys, I hope you understand this. Zillow is a for-profit company. They're publicly traded, which means they have a board. And the CEO of Zillow, Spencer Raskoff, he has a fiduciary, a legal and moral obligation to its board, not to your past client database or to you for that matter. In other words, they have a legal and moral obligation to make as much money as humanly possible for that board and for their shareholders. And that puts them at odds with you and oftentimes your clients. Now they're putting into their contracts, if you're not utilizing your past client database to the best of your ability, which also benefits Zillow and their board, guess what? Yeah, that would be a concern of mine too, because if there's one thing about Zillow, they have a long, rich track record and history of doing which is decidedly not in a real estate agent's best interest. Thoughts on that?
1,000%. They've ripped us off for years. I used to be a Zillow agent, and yeah, we've paid thousands, millions of dollars to them, and they've done nothing for agents. They've taken everything, and they're still taking. NAR is not doing anything about it. They're not helping us in the least. So that's what's really sad.
Well, that's a can of worms there. Hey, listen, you've been warned. If you're using Zillow and you're stuck in their ecosystem, just know this. They're not in this for your success. They're in it for their success. Well, that said, Madison, thank you so much.
Absolutely. Thank you.